Good evening everyone and welcome to a new video of the Rect Show. First of all, I'd like to have a moment of silence for the people buying Aeon above 1400 Satoshi. Seemingly people still don't know how to trade the crypto, but it's fine, as long as they stay around the others can make money. Today we have seen some really good movements from some altcoins, which you usually see when Bitcoin stabilizes or grinds upwards, and at some point altcoins start to follow. We've seen it on Cardano, we've seen it on Stellar, and there's a breakout of this amplitude. For Aeon, I wouldn't even touch it until it gets back to like 1000 Satoshis. But today we're going to discuss some about Bitcoin, some about Ethereum, some about Stellar and Cardano, not that much, and basic attention token. First, I'd like to thank you. First, I'd like to oh, this is the wrong one. That's the old one. I'd like to discuss my longer term view on Bitcoin, in which you can see that some altcoins are showing some really good movements and actually following Bitcoin or maybe leading. What we know is that when Bitcoin starts to rally upwards, altcoins start to outperform Bitcoin. So during the next bull market, you can also expect Bitcoin if Bitcoin rallies, then you can expect altcoins to outperform during the next bull cycle. Why? Bitcoin is around longer, there's a larger market cap, which means that it's harder for Bitcoin to make a higher ROI than the previous cycle, and I don't expect that to happen. But altcoins will have their renewed cycle after the first one, and during that cycle they probably make a higher ROI. Does that mean that you have to go all in on altcoins? No, always have a proper risk management, and also have a different strategy through trading and investing. I've had many questions today whether it's a good idea to buy Bitcoin now, given that we are breaking upwards and the halving is approaching, which makes me feel like there's the halving FOMO back again. So that's why I want to discuss the halving of the last time first and my scenario on the halving for now, and also through Stellar and Cardano. And first I'd like to say something about trading. If you are trading with a trading stack, that should be like 10 or 15% of your portfolio, in which you don't really care which way the market goes. You just make an ROI per month, take profitable trades, and when you make profit, you pay yourself with it, and you accumulate your long-term bags, which has a long-term horizon. And the longer term backs you just evaluate every month or every 2 weeks, whenever you want to. And you just have a different approach, in which you don't really mind if the prices go down, as your approach is for like the next few years. And if the prices go up hard, you just allocate less, take some profits if you expect the prices to drop down. And the long term portfolio is way larger than your trading stack. So what I just said is like 10-15% should be for your trading, like 80-85% should be for your long-term portfolio, or like 75 to 80%. And also your long-term portfolio in my case means that I'm not getting any pension fund or whatever, as I am an entrepreneur and a trader, so I have to build up my own wealth. And through that, the best option is to diversify, and I'll be going into depth with videos in the near future about what I'm going to do with that. But right now I'm mostly in cash, commodities and cryptocurrency. As for the last two, I'm expecting the markets to be bullish, given that I'm not bullish on the economy, and I'm expecting the Great Depression 2.0 to occur, in which we are just in one big bull trap right now. So for that, I'm currently allocating into these two asset groups, and I've got a cash position in which I'm also allocating to real estate in about 3 to 4 years from now. or maybe a little bit faster if the market drops a little bit harder. Then the question is about stocks, whether I have them and why I don't have them. Well, I do not have them given the current environment of the economy, and I'd rather wait it out until I see clear structure of any bottom formation in which the market is bottoming out, and then I'll be buying. I'm not going to buy any stocks when I see a ton of new stocks trading YouTube channels occurring, and when everybody wants to trade those stocks because it's just by the dip. That's usually the moment for me that I just want to be out. Remember, the majority of the people joined during December and January 2018, December 2017 in crypto, as they saw huge altcoin gains, and that's usually the last phase of the market cycle in which they drop down afterwards. So I'm just gonna wait and reevaluate every month and just slowly build up my long-term portfolio, and that's basically my strategy. I mean, if you trade with 100% of your stack, then you're also not sleeping well, which also makes your health less good, as you're constantly stressed about your positions, and that's just not the way how you should approach this game. So that's 6 minutes of some other talk. Let's go towards the previous halving, in which you can see that there has been a pretty heavy rally upwards going into the halving, as the halving was, I deleted it, beginning of July. I thought it was like 10 or 11 July. Crash beforehand, and afterwards another crash after the real bull cycle started. And when you go back into my videos, you know that there is a scenario in which we continue to rally. The halving is around here, which could make me believe that there's maybe some more FOMO coming into the event, after which we crash down and then start to the final drop, make a higher low, and then start to accumulate a rally upwards. That's because of retail reading the halving, seeing it as a bullish thing, as last time the bull market started around that period. The bull market from 1k to 20k. So during this period in which we just remain flat, if we hold 7.2, we could see another move towards 8.4, 8.5, and then we drop further down as a buy the rumor, sell the news concept. And what level am I looking at then? Well, then we can just include the moving averages, in which if we get another move towards like 8.4, 8.8, maybe 9, given the CME gap, wouldn't surprise me at all. Then come back down to the 200 weekly MA, which should then be around 6k, that level around 6k, and then we can slowly start to grind up towards the next bull market of Bitcoin, in which I am expecting the bull market to top out in about like 6-7 years from now, as this market cycle usually takes longer than the previous one. If we go back to the 2000 chart of Amazon, you can see that it saw a heavy crash back up. It took about like 3-4 years until it reached a new high. If you zoom out, you can see that the .com bubble is not even spotted on it. And what you can see is that after that there's just one massive rally upwards, and it just takes a long time until the parabolic starts. The last part of the parabolic, the massive gains are made. So if you just have an investment approach in which you DCA in a longer term perspective, in which you believe that Bitcoin will go to 100k to 300k, it doesn't really matter at which level you buy at this point. It's just the best way to DCA, and every dip you get, you just make some buys according to your portfolio or risk management. It's different with altcoins. I'm not stating that you should be going all in on altcoins, as that's just probably the worst approach you could have. In long-term perspectives and portfolios, you want to have a low risk approach, or at least to your standards. If you're older, you want to have a lower risk. If you're younger, you can take some more risk, but that having altcoins is just going to the roulette tables in the casinos and put everything on red, hoping that they will be making any big gains during the next years, or just with the roulette table you make that one big hit. You can just go into altcoins for your long-term portfolio, but you should be aware of the percentage of your portfolio that's into one specific altcoin. And you should also understand that when Bitcoin starts to rally upwards, usually all these altcoins follow suit. So the correlation is still very high in the markets, in which going into 15 different altcoins doesn't make any difference at all. You should also realize that if the market starts to change, the bias will still remain bearish on altcoins until the disbelief phase occurs, but that's a different subject for now. If we go towards Bitcoin, we have been discussing that yesterday, and there is not many movements since then. We're just ranging around. I'm still looking for this scenario in which I'm going to look for a long around 7.37350. If that happens, then I'm assuming we can go for another move up to 8k, maybe 8.5 or 9.1, given some FOMO, make a parabolic on a short-term time frame. If we get something like this, in which we make a scam wick to like 7.879, including a bearish divergence, I'm assuming this is going to be a trap, and then I'll be out and looking for shorts. Pretty easy game plan right now, not much to say, expecting the weekend to be pretty stable, given that there's not many movements during the weekend generally, but that gives altcoins time to make some movements. So I'd rather want to discuss some altcoins right now and give some of my views on them. One of them is Cardano, which made a tremendous breakout after some nice flips, as you can see, but I'm seeing people starting to long Cardano here. I don't know why. The preferably levels to watch for longs are 530 satoshis and around 500, 510, which I doubt we will get. If we get it, then it's probably a wick and a pretty decent long entry. If we get 530, you can just assume that we're going to see 600, 610, or we can see 660 as the next resistance zone to take profit on. If we don't get the entry over here, you're probably going to look for a structure like this, in which we make a bull flag scenario or a bullish pennant and then break out upwards and make a proper trade. They are usually a little bit more risk. If you buy a support, you can actually defend yourself with a proper stop loss level, but if it makes a bull flag or a bullish pennant, it's a little bit more risky, so you should adjust your sizing in your trade. So there's no point in going long on Cardano or on XLM right now, as there's many altcoins just showing the same graph or the same chart, in which they just have to follow suit. But these were the first movers, and actually Lumens was a signal for me to just go long on Ripple. I'm going to discuss Ripple a little bit more in the video tomorrow. As stated, I'm making videos on a daily basis unless it's Sunday. Cardano also hit the resistance here, as you can see, as we rally towards the level before the massive breakdown. Preferably I'd want to see a retest of the level around 0.038 cents. If we hold the area here around 4 cents, you can also see another move up. It's all about structure that has to be designed, but taking profits at these levels, or at least at this level, wouldn't be a bad cause if you have entered a long entry on this trade. Then we go towards what I'm expecting on a halving to occur. Well, I'm assuming that we might be going towards 4 cents or 3.8 cents and then have another rally upwards. But after that, we probably face resistance in this zone, make a top out, which probably all the altcoins will do during that period. And then the crucial question comes if we can make a higher low in this level here during the summer. If Bitcoin retraces and altcoins retrace as well, if we can make this altcoin a higher low here for many altcoins, which is actually confluent with these thoughts over here. If we make a move like this, in which we make a rally towards here, then come back down, stabilize here, then the real big moves start to occur, and the 4 and 5x could possibly occur towards from here to 3 cents to 11 cents. Right now I'm assuming we're just seeing a retrace back up, after which the crucial factor is to make a higher low over here, and if that happens we can have some real parties. I'm not assuming we're going to see new highs over here. We're just going to test the previous level and then go back towards the range low, and that's the one you want to have. Similar with Lumen at this point, it's still in the range. Didn't break out of the range. If it breaks out of the range, there's one level at around 1400 satoshis and 1280 satoshis, which is a probably good entry right now. Right now you can see that it's into resistance, and that doesn't mean that you have to long this one. You should be looking at the green zone as a possible retest and entry level on a higher time frame. If we break and flip the level here, we can also start a new trade, and then you want to target 1280 and 1400 satoshis. If you go towards the USDT chart, you can see a similar chart as on Cardano, in which I've already pointed out what I'm expecting to see occur, probably on a faster pace, in which we just make a retest and then make another move cycle towards like 8-7 cents, come back down, and then the real move and rally starts to occur during the last part of the year in 2021. Finally, a coin that I'd want to discuss, which is still looking the same as many of these altcoins, is basic attention token. You can just go to any other altcoin which is showing the same. Support resistance flip, and higher low, another flip here, another flip overall, inside the range in which the resistance is found here, making higher lows again, might consolidate for a little bit, but breaking the red zone here should normally trigger a continuation pattern towards 20 cents to 21 cents as a target zone. So this is the usual structure you can see. It's actually the same as Bitcoin when it broke out. You can play any of these altcoins as they are just showing some decent setups, but don't go all in on them. Expect that we could still see a significant retracement during or after the halving, which is the final bottom structure, and then the party starts. Thank you for watching. I'll be back tomorrow with a new video, a longer video this time, but I hope you liked it. Please subscribe and thumbs up if you enjoyed it, and reply beneath if you have any feedback. Thank you very much.